Hi, this is Bo Yoder. It's been a little while since I did my last video as the market really hasn't been that interesting. You can see here essentially from the high here around 85, looking at the S&P 500 through its index proxy, the SPY. Market sold off pretty smoothly and now has bottomed in a pretty clean V-type manner. Very unusual to see that in a market bottom. If we kind of go back in time a little bit here, see the last significant bottom was pretty violent, really strong selling and a strong snapback. And this time we saw pretty much a grind. Got to grind down to the lows. We got to grind back up to the highs. And this is transcribed in a near perfect breakdown retest type pattern. So if I take a horizontal tool here, you can see that prior area of support was broken. An area of support once broken becomes resistance, and we've tested that as of yesterday and today and have shown a strong reversal bar here on a daily level. I've taken some shorts here in anticipation of a multi-day drop to the downside. I would expect to at least see 75, if not a lot lower, perhaps even as low as the $70 per share level. This new $1 trillion being dumped into the markets by the Fed, I think, is going to be seen as a very negative effect. It's very dilutive. It's going to be quite powerful in terms of gold, though. So there's an interesting trade there. One of the nicest proxies, if you're going to be sticking to the stock market, is the ETF, the GLD, which is the Spider's Gold Trust. And you can see here how it woke up pretty much out of a slow, steady, low volume decline within the context of an uptrend. Just exploded in terms of volume and volatility based on that Fed news that essentially they were going to invent another $1 trillion to throw into the market. As you know, supply and demand is supply and demand, whether it's a stock, whether it's a physical commodity, or in terms of dollars, literally, the inventory of world dollars just increased by $1 trillion. I keep telling people who aren't particularly clear on this whole concept, let's think about gold. Gold is precious. Gold has value because of its scarcity. What if there was a Spanish treasure galleon that was discovered with 100 metric tons of gold and a series of them on some reef, and from the old pirate days? All of a sudden there'd be this giant supply, lots of gold would hit the market, you'd see the gold prices be depressed. Same thing's happening to the dollar. And actually, if we pause here for a minute and drop away from the U.S. equity markets, here we're looking at a daily chart of the U.S. dollar versus the euro dollar. Now, the way this is described, it's one currency versus the other. So weakness on this chart is actually strength in the dollar. It shows the dollar being stronger than the euro and gaining value over the euro. And you can see here just how violently the market reacted to that news of further dilution, and very uncomfortably, if we take a look at this on a much larger time frame, we see a higher low here and what should be a strong trend change. So we're going to be seeing another phase of strongly weaker dollars, which I think is going to be very vulnerable, which makes our market very vulnerable for our foreign investment. As many have heard me say in the past, I really believe a lot of our market rally that we saw in the last couple of years was from foreign investment brought in by not only the strength of American business at the time, but also the weak dollar. They were given a chance to buy into depressed stock prices with an inflated foreign currency. It was a great opportunity. Now that opportunity is inverting. We're seeing the dollar lose a great deal of its value. Plus, of course, the market has been down horribly, and there are losses there as well. So those two factors, I think, are going to help drive the market lower. And I'm really looking for some weakness here in the next couple of days. So thought I'd make a quick video, kind of show you the pattern. Very, very basic pattern, one of the oldest and most reliable, the breakdown retest. One of my favorites, and hopefully it'll pay out for me this time. So as always, thanks for listening. My name's Bo Yoder. Good luck and good trading.